My name is Karen Bell. I am the founder and CEO of WISE Network, Women Inspiring, Supporting, Empower Network. And we inspire, empower women and children, and we also give back to our communities. Actually, in the next few weeks, in August, we'll tell you a little bit about our back to school giveaway. And every month we have a conversation. And our conversations every month is from lived experiences. And it's experiences from our members and just things that we go through on a day-to-day basis. We're doing today real estate because it's, I think, one of the number one topics on most people's mind. And whether you're thinking of buying and or selling, holding, or thinking of investing, it's one of the topics that it's the around the cooler, in the boardroom, with your friends. It's one of those topics that it's resonates with everyone. So for those who are thinking of purchasing, for those who are holding on and wondering if it's time to sell, for those who we cannot actually give you absolutes, but we'll give you the best answers that we possibly can. So we'll begin this evening. We have three folks, and with all our experiences, I'm telling you, I think we're like at 20, probably around 70 years of experience. My time in the real estate has been over 23 years. I'll let Deborah introduce herself and Debbie introduce themselves. So Deborah, would you like to introduce yourself?
Hi, everybody. I'm Deborah Malcom. I do residential mortgages. Next February will be 20 years for me. So it's pretty much the only adult job I've had. It's my career since forever. I love helping people. So I look forward to helping you guys know the process a little bit.
And Debbie,
Good
Deborah.
evening, good evening, everyone. My name is Deborah Moxam, and I am the owner of ISO Commercial Capital. I am a commercial mortgage broker. When the bank says no, call ISO. I've been doing commercial, residential mortgages for going on 24 years. And like Deb, like my namesake, I love helping people. I love educating people about the investment process. I love showing women that we too can do it. And I like to scare people so that they know that they are ready for the process and for investing, owning your own home and owning investment properties. Welcome, everyone.
We promise that we'll not scare you this evening. We promise that we'll give you as much information so you can walk away with being informed. And that is what, so I'll start, and that's what my job is, to inform you of the process. So Deb, you want to pull up our screens?
Yep, and I'm sorry, it just disappeared. So we're having a little technical issue. Hold on one moment, everyone.
So
It was ready and now it's not.
I'll begin. So we'll start. I am with Caldwell Banker. I have been with Caldwell Banker probably about 5 years. I was with Century 21, Wycard Realty, and now I'm with Caldwell Banker. And the first thing I'll tell most folks, I know you've heard many things on the news about realtors, and you can do it without realtors. I would suggest that you don't. And I'm going to give you the reasons why it's best to have a realtor to help you through the negotiation processes, to help you find an inspector, to help you to find an attorney, to walk you through the appraisal issues. So there are many steps in finding a home that a realtor actually helps the client. And this is one of the reasons why it is important to have a realtor on your side.
Hold on, it's coming up now. Deb, I may have to send this to you because I can't get it. It's there, but I can't get it.
You want to email it? I'm sitting here, so I can share if you send it.
Yeah, let's do that. My apologies, guys. This is what technical difficulty.
So I'll continue while we go on. So as a realtor, she's paused, so something is going on. As a realtor,
on 1 second. I can't find it on my screen.
okay, continue that, Deb. I'll just continue with my presentation. As a realtor,
Right
we help you get the best price for your home. So we handle the negotiations of potential buyers and sellers. So whether you're buying and or selling, we help with that negotiation with the other realtor. We understand the market. So as a realtor, whether it's myself or any realtor, we understand the local market. So knowing the market, what we do usually when I sit with a client, I may do a comparative market analysis. And that is, if you're deciding to sell, my first thing is to do a market analysis to see what your home is valued. If you're purchasing and you want to purchase in a certain area, I also do a market analysis to see the prices of homes in that area. So it gives us an idea of, is that home overpriced? Because in this market, sometimes some of them are. And then we sit, we consult, you decide, okay, do I want to live in this neighborhood? Why do I want to live in this neighborhood? What type of home would I like to purchase? And it could be from a single family ranch style, a single family colonial, a single family split, a single family cape, the areas you want to live in. How about the schools? The choices you make in the areas you want to live in, the school district, what are they doing? So I can actually do those research and help you through those researches. Thank you. So thank you, Deb. So working with a realtor, as it says, saves you time, reduces stress, and it helps you to for a better outcome, whether you're buying and or selling. We will ask, and many people these days ask, especially younger folks, is it better to buy or to rent? Because again, it's out there saying, oh, it's better to rent. Why? Because you have freedom to move if you want. You have freedom to do what you want when you're renting. However, you have to think of cost when you're renting. The cost of rent now is almost as much as a mortgage. So do you really want to rent? When you're renting, how comfortable are you? Because you never know if you have to move next month because that person may want their home. They may want to raise that rent because they're saying, okay, I can find someone else who can give me, a few more dollars for that rental space. When you're renting, you cannot change the walls because there are rules in some areas where you cannot paint without asking permission. When you're renting, you cannot bore holes in the walls so you cannot put up your pictures, your personal pictures. So there are negatives to renting. There are some positives, yes, but you will have to weigh that. And then we walk through those things as we consult. Next slide. Yes, we went through local market. We can guide you through pricing your home when you're selling. So yes, we handle the paperwork and guide you through the closing process and provide professional advice through the transaction. So, and then what we do, we also know most of the realtors. As a realtor, we're connected with realtors, inspectors, contractors, lenders, and buyers and sellers. So if you put your house in the market, if you're selling, I can say, hey, to another realtor, I have this listing coming. Do you have any buyer? That home can be sold within a day, or a week, or a few weeks, based on where the home is, location, 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 and pricing. If you're buying, same thing. I can contact my other realtors and say, hey, I have a buyer looking in these areas. Do you have a home coming on the market? So having a realtor, these are all the positives. Next slide. We went through buying and renting. Okay, reasons to purchase. Living your best life and enjoying your home features. So when you own your own home, you have the space and it's truly yours. The privacy, it's yours. You can customize your home to your unique style. So you can change your paint color, you can move furniture, you can knock out a wall, you can do whatever you feel like doing when you own your own space. Okay, reasons to purchase. Like having your own space is truly your own. We're going back. Personal expression, customizing your home to your unique style. So when you purchase your home, feeling a greater sense of belonging and connection, a sense of accomplishment. After you've purchased your home, and I've found this with every buyer, at the end of that process, they feel a sense of accomplishment because they've done it. It's one of the biggest purchases you will ever have in your adult life, purchasing a home. Stability. It creates more stability when you purchase a home. Your mortgage usually stays intact for 30 years. I mean, there are other reasons your mortgage can fluctuate. Debbie and Deborah will go through that. Financial gain. You're gaining equity in your property. That is one of the biggest thing. If you rent, the equity is not yours, right? If you own your own home, if you purchase it, and I know the market fluctuates, but the market always corrects itself. So financial investment, whether you're deciding to purchase it for a home for yourself or for financial gain, it's next slide. It's always great to for financial. Any questions so far? So the process of purchasing a home, I will go through some of these quickly because Deborah and Debbie will go through, say, the pre-approval. When you're ready to purchase your home, Deborah will go through what you need to do to be pre-approved. But as an agent, the first thing I'll tell you is just get a knowledge of where you want to live. Know what you are ready to purchase. What do you want to buy? Where? Pre-approval. I'll tell you that's the first thing that you need to do is to get pre-approved. And as an agent, that's the first. I'll send you to a mortgage person to say, hey, you need your pre-approval because the pre-approval is crucial in understanding what you're qualifying for. How much house can you purchase? I always say that. How much house can you purchase? You need to know that. I need to know that. When you get your pre-approval, now it's time to go shopping. And this is what we need. And keep in mind when you're ready to tour. So your pre-approval comes first, and then I can send you all the houses that you need to based on the amount that you're pre-approved for. Making the offer. So after you've gotten your pre-approval, I've sent you homes through email. You've looked through many homes, and we have decided on, okay, this is the home that I'd like to make an offer on. We make an offer. Once the offer is accepted, and there are many things that goes on, the negotiation between agents and agents to get that offer accepted, then what I'll do, we'll write an offer based on terms that you understand. If the offer is accepted, then we move to an inspection. If it's rejected, then we move on to another home. Then it could be countered. So if you say, okay, Karen, I love this home. The home is on the market for 200,000, and you say, okay, I want to offer 180. The other agents will get back to me and say, hey, 180? No, I'll take 190. So a counter offer, we may put an offer in, the other agent may counter, and we'll go back and forth until we come to an agreement. At that time, if your offer is accepted, then you will have to give an earnest deposit. And that is for the other agent and the seller to understand that, yes, you are definitely interested in this home. So your earnest deposit then goes to the other agent's office, where they hold that deposit, and that deposit also will calculate towards the purchasing of your home. Deborah will go through how that works with the earnest deposit. When that offer is accepted, your earnest deposit is sent in, then we go to inspections. Again, there are many inspectors out there. We'll go through inspections. And I always tell my clients, it does not matter. Please do your inspections, because what our eyes cannot see, the inspector then can find something and that inspection can help us to move along with a contract or to walk out of that contract. Because if there are problems with the homes that you and I did not see, whether it's mechanical, electrical, foundational, the inspector then gives you a report after inspection is done. And from that report, we decide if we want to continue on with that contract. After the inspector is done and you're satisfied with your inspection, then we move on to an appraisal. And again, the appraisal, Deborah will go through the appraisal process and what it means. If the home is not appraised, say for instance, we offer 200,000, the appraisal came in at 180. Do you think we should purchase that home? Anyone? Do you think we should continue to purchase that home?
You can, but you have room for negotiations.
Okay.
Or maybe it's you can use it as a tool to say, hey, maybe they can offer some deduction on closing costs or something to do, repairs or something. I don't know.
So again, Deborah will take on the appraisal. However, during COVID, those years, we had so many because there were so many offers, counter offers. We had folks who were purchasing homes cash, and these folks were coming in and saying, hey, even if it doesn't appraise, I will accept this property. What happens if you take a property that's underappraised is that your home may be the most expensive home on that street or within that 1 mile radius. Because when the appraiser goes in, he checks or she checks within a 1 mile radius to make sure that the home that you're purchasing is within the confines of the pricing is conducive to what's going on in the neighborhood within a 1 mile radius. The property then, if it's appraised, then the property goes to underwriting, and Deborah will go over that portion again. Underwriting, it comes through, we get a mortgage commitment, and then we go to closing. At that point, our attorneys take over, and we congratulate you. Thank you. You did it. We did it. We'll do a walkthrough before we go through to closing. And and then you'll get your key. Any questions? Or we can leave all the questions until the end. What do you think, Deborah?
I think save them for the end, because maybe some of us will answer some of them, or
Okay.
and to be mindful of time.
Yeah. So go ahead, Deborah. You can take it from here.
Okay, so Deb has to stop sharing so I can share.
And in the essence of time, as we're going, as you think of questions for Karen and for Deborah and myself, just
Put it in
pop
the
them in
chat.
the chat. Exactly.
Can you see the screen?
Yes.
Okay.
Mhm.
Hi, everybody. I'm Deborah Malcom. I work for New American Funding. I'm sure many of you, if you're in Connecticut, have not heard of this company because we just came into Connecticut last year. First branch opened, but it is the fourth largest privately owned lender in the whole country, owned by a husband and wife. She's Hispanic. She's very big on initiatives and creating home ownership for all types of people, especially Hispanic and Black. We have specific programs for getting more people in homes. So that's a little bit about that. Through my 20 years, I have worked for broker shops. I've worked for other direct lenders. I came over to New American because the last company I was at for 8 years was bought out by a tech company, and they were just going in a different direction. It was an ugly, ugly divorce. I'm still heartbroken because the company that I left, I was super happy at, but when I left, it wasn't the same place. It was changing. So to be mindful of time, I'm going to try to fly through this stuff, but this is just the basics of residential mortgages. So there's 6 kind of important steps in the mortgage process. One is getting pre-qualified or pre-approved. I want you guys to know the difference. Pre-qualified basically means somebody has looked at your credit and taken your application and verbal information, and they say that you can get a mortgage for this amount or this monthly payment. A pre-approval basically means that your loan has been underwritten, documents have been verified, and it basically just means that you need to find a house at that point. It's much more stronger than a pre-qualification. Honestly, guys, I've never done pre-qualifications, and they wouldn't work in this market right now anyways. So pre-approval is always number 1. Number 2 is shopping, which is at what point you would go to Karen. Number 3, the loan goes to processing once you have a house and you're under contract with Karen. Then after processing, it goes to underwriting, which basically means the underwriter is going to review everything that you provided to me and make sure it all matches. And then in that process, there's going to be a title search ordered with the attorney that you choose. Connecticut is a state where you get to choose your own attorney. And then there's going to be an appraisal done most likely. There is the rare occasion if you're putting a lot of money down and you're not paying high price for the house that you will get an appraisal waiver. But honestly, guys, I'm not seeing those at all anymore. I saw them more during COVID with refinances. So bank on the fact that you will have to get an appraisal done. All of that's done at the same time underwriting is going on. Then we have an approval from underwriting. Usually comes back and says, okay, I need maybe an updated bank statement showing your deposit that you gave Karen clearing. I need you to get a homeowner's insurance policy for the house, simple stuff like that. My job is to make sure when we get that approval that there's hardly anything on it. I don't want anybody to stress during the mortgage process. If I can do anything, what I tell my buyers is I want it to be the smoothest thing you've ever done buying a house. Then the last step is closing, which I'm not really a part of. You basically set up the closing with your real estate agents and your attorney. Same process for refinance, except you don't really home shop. Everything else is pretty much the same there. So I'm going to spend some time talking about the pre-approval. I'm going to tell you my way. So the first thing I do is I'm going to have a verbal conversation on the phone. I know a lot of younger people just want me to send them an application and they want to fill it out. But guess what? That application is not going to really tell me your overall situation. It might say, okay, you want a house maybe around this price, but it's not going to tell me anything personal about you your goals and what you want out of this. Do you plan to be there for a few years, 5 years? Is it going to be a forever home? So I like to have a verbal conversation and make sure also that what you're looking to do is feasible. Sometimes I talk to people and they tell me they want to get a house and they want to spend $1,000 a month for a mortgage. Guess what, guys? It's not happening in Connecticut anymore. So I don't want to just send somebody an application and have them fill it out knowing that what they're looking to do is not possible. So I like to have the verbal conversation. Usually, again, I've been doing this a long time. I can tell within 5 minutes if the person is most likely going to qualify or not. Within that verbal conversation, it also gives us opportunity for me to ask if they have any fears about their credit, if there's anything they think is on there that could be an issue. Sometimes if they say, yes, I owe $6,000 on a repo from last year, I will automatically know that they need to take care of that. There's certain criteria. Typically, anything over $2,000 in collections needs to be taken care of, or they need to set up a payment arrangement. People think they need to pay it off. You don't. If you set up a payment arrangement, we can qualify you based on that payment arrangement you set up. Disclaimer, get the payment arrangement in writing. Anything you ever agree to, get it in writing, because that's what we'll need. So assuming everything is good in the conversation, I send them over my link to complete the application. With that, I give them a list of documents to gather. So when they sit down to take the 10 minutes to fill it out, they have the documents there with them. They can email them. They can upload them to the application. I'll take them by text. I have some people that don't like doing all that, so they can drop them off to me, even at my house if they need to. Whatever works for the person. You've got to be flexible with this stuff. So that's the third step, is gathering the documentation and then the credit review. So when my job, and I tell everybody this, when you fill out an application, it's not like you're going to a credit union and applying for a loan and somebody's just going to look at it and say yes or no, approved or denied. My job is to go through it and make sure you filled it out correctly, make sure that the picture is painted accurately. And I mean that because there are simple mistakes you can make on there that could be detrimental. So I always tell everybody, don't worry about what you put when you fill it in. I will go through and make sure everything's accurate and the way it needs to be to make sure your loan is going to, again, be smooth. Part of that is me reviewing their credit, making sure there's no issues within there. If people don't qualify, I take the extra time to tell them what they need to do to get to that point. Do I hold their hand and follow up with them every month? Honestly, no, because that would be, I mean, I wouldn't be able to do that with hundreds of people, but I definitely give them a breakdown of what they need to pay down, what they need to pay off. Please, please don't dispute accounts on your credit if you have balances on them. You cannot get a mortgage if you have disputed accounts. So just be mindful of that. That's probably one credit tip. And if you have credit cards, please pay them down to 30% of the credit limits before you apply for a mortgage. Once you're pre-approved, then you get back in touch with Karen. So I want to go over some of the documents that are required, because I oftentimes get people that are still shocked that they need to provide certain things and they question, and I explain to them why it's needed. So if you work a regular W-2 job, it's a lot easier. You just need the last 2 years W-2s. You just need your last 2 pay stubs, driver's license, bank statements. If you're using any other accounts like 401ks, a lot of people borrow against their 401ks right now for down payments. You will need those. If you're self-employed, this is where it gets tricky. You're going to need tax returns. If you have business tax returns, you're going to need business tax returns, and that's going to be for 2 years. You're also going to need profit and loss statements for year to date, and obviously they want to make sure that the business is still bringing in income and that you're staying afloat. Bank statements, can't use snippets, screenshots, needs to be a full bank statement. Yes, we need that junk page that has instructions on the back. If it says 1 of 6, your lender will ask you for 1 of 6, even if you say, well, there's nothing on that page. Or sometimes Bank of America puts one that says this page is blank. Guess what, guys? We need it. I spend more time on bank statements than anything. If you transfer money between accounts, try to stop it a few months before you go to purchase, because otherwise you're going to have to provide every statement under the sun. If you don't mind doing that, fine, but you will need to document the money moving between accounts. Divorce, if you've been divorced, pay child support, alimony, you'll need divorce decrees. Let me think okay. So a lot of people these days are getting gifts for their down payment from their family. You don't need this upfront, but I get a lot of pushback that if you're doing certain types of loans, like government loans, the donor, your parent, will need to provide their full bank statement. We'll need to see the money coming out of their account. Oftentimes people say, well, they're not going to want to show you. That's an invasion of privacy. But if you know this going into it and you have this conversation up front with people, then they know what to expect. They don't feel caught off guard. So this is why me personally, I try to be this thorough on the front end before you even find that house, or early on once you have that house under contract. So during that approval stage, I'm not coming back and asking you for 15 things. That can be overwhelming, and then you feel caught off guard. So within the credit, these are some helpful tips on here. This left side shows you what makes up your credit score. And guess what? MyFICO.com and your credit card companies, they're not giving you guys your accurate credit score. Conversation I have every day with people is, well, I see that my credit score is a 700. Why are you telling me it's a 680? It's never either high or low. It can be either way. But when we pull a credit report, we pull what's called a tri-merge report. So it pulls from all 3 credit bureaus. We use the middle of the 3 scores. It's never going to be what you see as a consumer. What you see as a consumer is a guess based off your recent activity that they have access to. When we pull it, we're pulling a hard inquiry. We're pulling a full credit report. So I promise you my credit scores are accurate. These things on the left tell you how your credit score is determined. Your payment history, the amounts you owe, how long you've had credit, if you have new credit, and then the different types of accounts you have. You want to try to have a few different types of accounts, but you can see the payment history is the most important thing, followed by the amounts owed. I will tell you that every day I have to have this conversation with people. If you have a Capital One credit card for $1,000, please keep your balance underneath $300. Because even if you're paying it on time every month, but you are over that 30% of the balance, it's not doing anything for your credit scores. It's not helping you. It's actually sometimes hurting people because it looks like they're overextended, especially if it's multiple accounts. So that's pretty much it with where credit is concerned. If you've had issues, Chapter 7, Chapter 13, foreclosures, if you've given back a house deed in lieu, loan modifications, or if you've entered into consumer credit counseling, this is just, and I posted this on my social media at the end. I'm going to give you the links to my social media so you can refer back to this, or maybe Karen and Deb will want to send this out, but it just shows you with the different types of mortgages for residential, how long it needs to be since you've had any of these situations. You'd be surprised to see that sometimes it's not that long. All right, so now the different program options. There's hundreds of programs. I could probably spend an hour talking about the different programs, but predominantly what we see, the best one right now that Karen will probably tell you, if you're making offers on house, if you're not paying cash, they really want to see a conventional offer. For some reason, plug your ears, Karen, realtors think conventional loans are wonderful. Guess what, guys? All of these loans are wonderful for different reasons, but they're scared of them because unfortunately, not all of them know certain tips. Like with FHA loans, you can't have any peeling paint on the house. You have appraisers who think that you can't have peeling paint on houses built after 1978, but guess what? You can, and I've won this battle. But you have a lot of people that don't know guidelines, and so they've had one bad experience with that type of loan, and they kind of put a big X on it. So if you're making an offer on a house, which my clients do all the time, and there's multiple offers, and you have somebody that's doing conventional or FHA, oftentimes, but not all the time, what I hear is the conventional is going in the yes pile and the FHA is the maybe. Conventional is separate. It's Fannie Mae, Freddie Mac, if you've ever heard of those type. If you're a first-time buyer, minimum down payment can be 3%, credit score 620. But with a 620, conventional beats you up on pricing. So interest rates with conventional can be a lot more picky than the government options. Government loans are FHA, VA, and USDA. USDA is for rural areas, so it really depends where you're buying. Not every property fits that one. And VA, you have to be a veteran, and or your spouse needs to be a veteran. FHA is probably the easiest loan, honestly, to get from a mortgage perspective. They're a lot more lenient on guidelines. They allow you to finance more than conventional. So it's not a bad loan, even though people don't love it on the realtor side. I just want to touch, if you're in Connecticut, on one specific program that I'm sure you've seen on the news or social media over the last 2 years, and that's the Time to Own. Everybody asks about it. It's a needs-based program that the state of Connecticut came up with. It's a grant. They'll give you between $25,000 and $50,000 forgivable to use towards your down payment and closing costs. If you have your own money and you already wanted to put money down, you can still use this program. I had a gentleman earlier this year who put $200,000 down of his own money and got $50,000. So this is a great program. There is income restrictions for it, and the amount is based on where the property you're purchasing is located. Tons of guidelines, silly stuff like they do make you spend a certain amount. Whatever your monthly income is, the mortgage payment needs to be at least 30% of that. Some people don't want to spend that much, so there is a lot of little guidelines, but getting pre-approved and going through with somebody like myself will answer all of those questions for you. But I get asked about this one every day, and I think it's a great program. It's not going to be around forever. We at NAF also have another program. It's called NAF Cash. It allows you, if you're struggling getting offers accepted because you're up against cash buyers and you keep losing, we can buy the house for you cash. We buy it within 7 to 14 days. There is a fee for this. It's obviously not free. It's 2.25% in Connecticut. And in essence, we buy the house cash. We provide proof of funds to your real estate agent. If you're selling a house, this gives you time to sell your current house. If you're not selling a house, it just gives you an advantage because you're a cash buyer. You end up, after you sell that house, you buy the house back from us. And that's where you pay, built into the loan is that 2.25%, because there is transfer taxes that are due. So that's a big part of what the fee is. And of course, somebody needs to make something off of it. We only offer this program for conventional and VA loans right now. This can also be used as a bridge loan. So if somebody is selling a house and they're going to have enough money after the sale of their current house, they don't have to buy it back from us. They can just pay off the loan and pay the 2.25%. So it's a great alternative to the old school bridge loans if you've heard of them. Last big thing is mortgage rates. Again, we see them on social media and the news all the time. Everybody thinks rates over the last year or so have been crappy. 7% is not terrible, guys. We were just all really spoiled during COVID. Ask some of the older people what they used to pay for their mortgage rates. They will tell you 13, 14, 15. I've heard 19%. It is what it is. I'm telling you, if you wait for mortgage rates to come down, you're going to be paying more for the house and you're going to have more buyers in the market. So as long as you are comfortable with the mortgage payment, that's all that matters. You're not going to post your mortgage rate on your fridge so your friends and family can see what you have. It's not a competition. If you're comfortable with your mortgage payment, you still have quality of life and you're in a home you love. To me, that's the most important thing. Pretty much all of the loans that I offer, they do not have prepayment penalties. So at some point, and there will be a point, there's going to be another mini refinance boom. Most of the people that have bought in the last year and a half will refinance. Right now, what I'm seeing for mortgage rates is anywhere from the low to mid sixes, for certain programs, the high sixes, but pretty much everything predominantly is under 7% right now, with the exception of anybody purchasing a second home or investment property. And I'm kind of not talking about investment too much because I'm going to leave a lot of that to Deb. So I'm kind of staying on the primary residence route with what I was talking about here. And this is the page that gives you all of my social media. I do want to point out the website experience.com. You can find me on there. This is something I started maybe in 2020. where people can leave reviews, so you can go and read it. I think when I did this, I had 573 there. I have closed thousands of loans in my almost 20 years, but there is 500 and something reviews that you can read about if you ever wanted to. If you guys have other realtors or lenders that you know and work with, that's fine. You don't need to work with me, but if you want a second opinion or a friend that is experienced, please don't keep me a secret. Deborah Malcom, your trusted advisor for all things mortgage related.
Thank you, Deb. That was wonderful. And I'm sure I saw some questions coming in, so we'll attack those questions at the end. We'll wait for Deborah to do her presentation, and then we'll answer all the questions at the end. But I want to emphasize, as Deborah says, it's the time to buy is when you are ready. It's not about the rates, the mortgage rates in the system. If you wait, you are going to be disappointed. It's when you are ready and comfortable to purchase that home. Deb, are you ready to go?
Yes, I am. Can you hear me?
Yes.
You can hear me. Well, Deb, you did amazing. I hope everyone took very good notes, because I'm not going to be repeating a lot of what Deb says. I'm going just to add the icing to it. So, Debbie Moxam, I am the owner of ISO Commercial Capital. I'm a commercial mortgage and business broker. So who would like to buy one of the properties that you see in front of you? You can have one of these mixed use and commercial buildings. Introduction to commercial real estate loans. The definition of a commercial real estate, they are financing option used to purchase, renovate, or refinance properties that generate income, such as office buildings, retail spaces, and industrial complexes. The purpose of securing a commercial real estate loan is to provide capital for those businesses and investors to acquire or develop income-producing properties. What is a commercial real estate? So, what does my day entail? Get to that in a second. Commercial properties are any properties with more than 4 residential units. So you would go to Debbie Malcom if you have a property 1 to 4 units for owner occupied or for investment options. Now you think about Debbie Moxam, ISO Commercial Capital, when you have properties with 4+ units, or you can have an office building, or you can have a storefront with 2 apartments above. Those are called mixed-use properties. So a commercial real estate is a location where business is conducted or there is income being produced, which would include office buildings, retail shopping centers, medical office buildings, self-storage units, mobile homes, and I am the church lady of late. We'll talk a little bit more about that when I talk about the programs, but churches are commercial units. So what are the differences between residential and commercial mortgages? Debbie did a great job of sharing and explaining how you qualify for a residential property. That is one of the biggest difference. As residential, you're generally qualified based on your income. With commercial mortgages, we don't look so much as at your income, we look at the subject property that you are looking to purchase. So this is where we get into, I call it the alphabet soup. And that's where you'll hear the PFS, you'll hear the DSCR, you'll hear stated, you will hear a lot of different alphabets that we use in order to determine if you can afford this and if this property can get a mortgage to sustain what they're asking for. Sometimes you'll see a purchase price. Purchase price could be $600,000. However, does the income on the rental, are they able to cover a mortgage of that size? And that is a commercial mortgage. So with regards to the differences, it is how you determine if you're qualified. And another difference is Generally, the tax rules, they differ regarding residential mortgages and commercial. Also, if anyone, God forbid, has to go into a bankruptcy, the two different properties will be handled differently. So Deborah and I, we usually tell you to refer to your accountant for the tax rules and refer to your attorney for any BK questions. So why do people come to a commercial broker, such as myself, and not a bank? A bank is great to use when you have established relationships, you want potentially lower rates, and better familiarity with the local market conditions, particularly if someone is in Hartford or in New Haven. A bank in Albany, New York may not really know what's going on in Hartford or New Haven. When do you use a bank? Straightforward transactions, one that are very vanilla based, and I'll describe that a little bit later. It fits into a little box. Those are established businesses with strong financials or where there's a personal relationship that's very crucial. How do I get my businesses? People come to me when the bank may not service a commercial loan. I was with a credit union this 2 days, it was yesterday. And I walked in, I was handling some of my own business, and the manager was there. We were sitting down, we were speaking. I said, if you have any business for commercial loans, he says, that's great because we don't service commercial loans. We do not originate, and I would love to have your number so I can refer my clients. So that's when you deal with a commercial broker. Sometimes your loans do not fit into your bank's strict requirements. What does that mean? The vanilla box. You would have to have 25% strong. You should be able to show that money in a bank account, in a 401k, or the property has no issues whatsoever. Otherwise, what happens? They refer them, the bankers refer back to me. So how do I get my business? I get it through commercial bankers, commercial realtors who need a little bit more hand-holding and direction. The advantages of utilizing a broker. We have the expertise in navigating complex transactions. I have access to over 50 lenders, whereas if you walk into Wells Fargo or if you walk into Webster Bank, you're only dealing with that one lender. I utilize negotiation skills for the realtor. We work very closely together to get the deal to fruition. And when would you use me? Specialized properties. For example, I had a case where I had a 6-unit warehouse and the bank, Liberty Bank, couldn't do anything with it because why? My client, he does not like to show money. They like cash. Cash is king, right? We have always heard cash is king. However, cash is not king when, as I'll go back to residential, when you need to show the money. It needs to be either an income, it needs to be either in your bank statement for at least 2 months. And my client did not have it. So what does my referral partner do? He contacts Deb and say, Deb, doesn't fit into our bank's requirements, but I know you can get it done with an SBA loan. Now, did you know with SBA, you can get your property that you are actually having your business out of for only as little as 10% down? A lot of people don't know that. So I handle specialized properties, specialized conditions where I have to get creative, complex financing needs, or if we have to get it taken care of, lacking time, and if someone does not have experience in commercial lending. I do a lot of, as I said, I am the church lady because I have a lot of churches that come to me and don't know where to begin. And as Debbie said, they really don't have time to hold your hands. So I do a lot of hand holding. Sometimes my deals take up to 6 months, but I always tell my clients, if you give me the time and do exactly as I say, you will get into your property within 6 to 12 months. So again, if you don't know where to begin, If you can't show your income to support the property you're interested, or you may not be able to source your assets. You know, you might be getting it from a sister or a friend, or you have the cash, but it's not in the bank. And we can't just put the bank in, especially if you have to close in 45 days. Deb couldn't do the deal. Deb couldn't do the deal, but then Deb would call in and say, Deb, can you do something? And I'd be able to get that deal done. The commercial loan process is very similar to Deb, so I'm not going to go into it again. I have a conversation, a general conversation to fact and find out what you're looking for, determine where your credit is, indicate what documents you need, such as everything that Deb said. But generally for commercial loans, we need to get 3 years tax returns. We need to get the signed contract and supporting documents with regards to your assets. The loan type I'll talk about in the next slide. And then we will talk about the 1919 again. I'm going back and forth here because I do business financing as well. So that is where your personal financial statement comes in. That is a snapshot of everything you own. And we determine how we can make the deal work based on your PFS. DSCR, PFS, 1919, these are all SBA acronyms that if you call me directly, we can talk more about that. So you have a property. And Deb, I want to get this. It's a 7-unit building. It has 7 residential and there's 2 retail properties underneath. I reach out to several of my lenders and find the best rate possible, the best terms possible. And my lenders come back to me with a term sheet that I present to you. Once we get the term sheet, we proceed with the appraisal and environmental. What is a phase 1 environmental? Phase 1 environmental is if someone is buying a chemical property, such as a gas station, such as a repair auto body shop, or anything where chemicals are exposed to nature. And those can be very expensive. So Deb didn't really touch upon the cost of appraisals because they range, right, Deb? Those range from, is it 400 to 700?
I mean, I would say the lowest is probably 500. Appraisals have really come up since COVID. 500 to probably 750.
For a multifamily.
Yeah.
So now compare that with commercial. Commercial starts at 2,500 with me. So a person has to be, I have a different kind of clientele because this is a business person who's looking to invest for the long term and is willing to spend the money. They have to do a $2,500 for an appraisal, and that appraisal can be between $2,500 and $5,000 depending on how quick you want it back. Environmental inspections can start from $2,500 to $5,000, and if you have to get a phase 2, those are upwards of $25,000 to $40,000. So that is a little bit, again, a difference between the residential and the commercial. Choosing your insurance agent and your attorney, we recommend, Deb and I would recommend that sooner rather than later because they are crucial to helping the process move along so that we can get the estimates we need for closing. Now, the different types of commercial real estate loans are the traditional ones that we talked about with the banks and the credit unions. They have typically lower interest rates and longer terms. Those are suitable for well-established businesses. Then we have the commercial mortgage-backed securities, which are pooled loans that are packaged into securities and sold to investors. Those are generally for very large properties, so I won't linger there too long. Now, my SBA 7A loans are government-backed loans through the Small Business Administration, and these are lower down payments, which I shared. You can do as low as 10 to 15% down to get in the building that you want, and longer repayment terms. They're ideal for small businesses needing flexibility and lower upfront costs. Now, Deb and I can use bridge loans. Bridge loans are, say you're selling your one property and you are up against a time crunch That's where a bridge loan, that's where people come to me, a bridge loan. Sometimes they're called hard money loans. And we can close very quickly before you can sell your property. We can get you into the new property of your choice, and we can help with renovating or repositioning those properties. So something to keep in mind. Documents, again, I won't go into it. It's very similar to everything Deborah explained. You need to know before you come to me what your credit score is. If you don't, we can pull it, but we just don't want to waste your time or my time. We need an executed purchase contract of some form of identification. Again, we talked about the income requirements, which include tax returns, W-2s, and property leases. It would be good to know if there are any existing liens or issues with the subject property. We have a deal that is currently in office, and our buyer has been ready to close a property in New York. It's a 10-unit residential building in New York. My buyer has been ready for going on 6 months. However, there's been an issue on the seller's end with a lien that we cannot get removed. So this is going from, we should have closed back in January. We're still waiting to close. So unfortunately, commercial deals can go a little bit longer, between 3 and 8 months, depending on how difficult the deal is to get done. We also need to show bank statements. And again, if you have a prior phase 1, please send it in. Commercial rates compared to residential, they're a little bit higher. They're average between 7 and 9, 10%. Now, I didn't talk about stated. Stated deals are when some people are sales and they may not be able to show their income as you can with a W-2, with an established business. So those deals I can get done if you find a property, for example, that's $450. Deb, my income is not showing that on paper. However, I'm self-employed. I do a gas station. I'm a salesperson. Give me to their 25, 30% down, and you can get into that property. You're paying for the rate. The rate is between 12 and 15%. However, you can always try and refinance within 3 to 5 years. Lastly, our loan terms. They're generally on a commercial loan, 20 to 25 years. But some of my non-bank lenders and my stated lenders are up to 30 years. So this is on top of everything else that Deb has explained. If you have any particular questions or just want a consultation to go over anything, you can reach out to me, Debbie Moxam, at ISO Commercial Capital. I hope I didn't rush, because I know it's in the essence of time and we like to keep our conversations down to an hour. So we thank you guys so very much for being patient. Questions, Karen, I take it back over to you.
Okay. Thank you guys. That was very, even for me, who has been in the business, very interesting. Now we'll take your questions, and I know there are a few questions in the chat. So
I went through and answered mine.
you answered yours. Could you just read them out, because maybe others have the same questions in thought? Deb, if you don't mind.
I don't mind, but I'm sure they can also see them. So one person asked if New American was in Virginia. I explained that I personally am licensed in Mass, Connecticut, and Florida, but I can help you in any state in the US plus Puerto Rico. I'm just technically not the loan officer. I become the loan officer assistant, but I do everything on it. So you're still only dealing with me. And then she asked, how many mortgages can one person hold? We have programs up to 10 that we will lend to one investor. And then what is the amount of time funds need to be in the bank? And there is no seasoning requirement as long as it comes from an acceptable place. So it can't be like cash, under your mattress. It needs to come from like, a family member, another account, stocks, investments, CDs, things that make sense that we can document. And then somebody asked me my phone number, so I put my information in there. That was pretty much. And then somebody asked about the documentation for a refinance, so I put that in there. And I think there was one question for you, Deb, if you offer SBA loans outside Connecticut.
Yes, and I just responded to the individual. Yes, I can do SBA loans and commercial property loans in 46 states.
I have a question that probably both of you can, because a lot of Jamaicans do
So
that.
partner.
Or
I call it pool sharing.
pool sharing, right? So if someone
Partners.
did a pool sharing and they got their payment, how can they manage that fund if they need it for down payment or to use towards their home?
By
Oh.
2 months after you put the money in there.
Okay, so they can put the money in 2 months after?
Yeah, as long as I have like a 60-day transaction history without seeing that large deposit. So these are sometimes conversations we have where it's like, okay, you have the money now, and even like 30 days afterwards, I'll be like, okay, it's okay to go shop for a house now. You have 30 days, you'll have an updated one before we close. We just don't want to show large deposits. You can't, those situations, Karen, you can't really show where the money came from. It's impossible. So you can't really use it. So you got to make sure it's in there and we don't see the large deposit. I can see it, but my underwriters won't.
Okay. Because it's
I had a deal like that, gosh, going on 20 years ago. And we had to get every single copy of the banker's partner information. A lot of people do not want to release that information just because of security reasons. It is, as Deb says, very difficult. Just if you know you're buying a house, get the early partner up the first hand, put it in. Today, this is June. You're going to get a statement in July. You'll start getting start with Deb.
Or Karen,
in September.
Give the money to your brother. Have your brother give you a gift.
Okay, right. So they can do it as a gift. Okay.
Yeah.
Yes.
So anytime you have large amounts of money, you can't document. Like I tell people, I will tell them what to do to get the money back. And it's the gift. If it's a primary residence, you can't do this with investment properties, though. It has to be your own money. But primary residence, getting the money that you need is pretty easy because of the gift option. It's just a conversation. So don't be afraid to have the conversation. Be honest with your loan officers, guys. The more we know, the more honest you are, the better we can help you.
Yes. Tell us everything and let us be creative and see what we can get done, or we'll be very blunt and let you know you cannot get it done at this time, but give us 3 to 4 months.
Which, speaking of Jamaicans, they never like to talk about that stuff.
No, they like to piece information. And, they give you one bank statement, they give you 1 page. No, we need, as Deb says, we need all pages. But why you need all that information? Because we need to make sure that there's no fraud. We need to ensure that your W-2 and your tax returns are accurate. And Deb didn't allude to this. However, she might have. However, everything that you provide and give to us is verified. So if you give us a W-2, if you give us pay stubs, we do verify them. The underwriters, they do have their back office, right, Deb? And they will see.
They check with the IRS. They make sure the numbers on your return you provided match what the IRS have.
Yeah. We've seen those situations where.
Knock on wood, I haven't. Knock on wood. I hope I never do, but.
I had a case, it was, this was for a business acquisition. They wanted to buy a franchise. And I had the client's application, it was in, everything was in. And my underwriter calls back and she says, do you know that your client pretended to be a police officer? That was a felony on an SBA loan. You cannot have any felony. So got to ask the right question. We learn every day.
Any other questions?
If you're buying an investment property, how much do you need to put down?
Generally, you need 20%. Deb and I usually say 25%.
So what kind of investment property though? Because with single family and condos, you can do 15%.
Oh, yeah, I was thinking a condo.
Yeah, 15%.
Okay.
But you're going to get beat up on rates. Condos are more expensive than single families, and it's an investment property. I'm doing one right now for a guy. I think his rate's like a 7.6 that he's getting, and he's putting 15% down on a condo in West Hartford.
It's not too bad. It's not too
No,
bad.
not
So
terrible.
50, so it all depends
3
on the
points, though.
property.
3 points.
That's
Mhm.
that hurts.
Because
Imagine if
that's the highest rate available on my rate sheet.
what's the purchase price, Deb?
Oh, what is it? 370 something.
Yeah,
Mm,
so think about that's that's over $6,000 just in points he's paying.
Mm.
Yeah.
Yeah, I'm going rural, Deb.
okay. Any
I
other
buy a
questions,
farm.
ladies, gentlemen? Okay, so with no other questions, we will say our goal is to let people know that you can afford to purchase. And in our opinion, it is much better than renting. Um, People, it doesn't matter what you may hear, and we've heard it. And what I see now is they're trying to push, especially our younger folks, towards renting. Guess what? You're paying someone else's mortgage. So it behooves you to save the money, reach out to Deb, let them outline what you need to get your credit up to par so you can purchase. But in our estimation, everyone can actually, if you can rent, you can purchase. The numbers are there because right now to rent, it's thousands of dollars. It's not $900 like before. It's $2,000, $2,500 to rent a 2-bedroom, $3,000. So it makes sense. If you have any other information, if you need any other information, if you know of someone ready to sell and or purchase, reach out to any one of us, and we can guide you along that way. If you need a consultation or information, feel free to connect with anyone. We can consult, guide you towards home ownership, business ownership, leaving a legacy for your children, because I don't know if I mentioned that, but owning a home, you're leaving a legacy for your children and your children's children. So when you rent, the money just goes down the drain, goes in somebody else's pocket. So think about, if you do not own, think about ownership. The work can be done to get you to that end. Thank you again. This is from Wise Network. We do have a conversation every month. We do what's coming up. We're giving back to our community. We do that every year. And our next event on the 24th, 25th of August is we're giving back book bags and school supplies to young children in the Hartford region. Feel free, we have our flyer. You can go through Amazon. We have a list of items. We're actually going to collaborate with Hartford Police to do this give back. So if you want to give back, feel free to help us to get to our goal. We thank you. We thank you for your time. Time is precious, and we appreciate you spending your last hour with us. If there's no other questions, and I'll wait one more second. No other questions? We'll log off and we'll say good night and goodbye. Thank you all.